compliments of the season, guys, and welcome to this year's first weekly forecast for the month of January 2021. So I hope you all had a good festive season in the new year, and hopefully you've been working on your charts, you've been reading and trying to understand the concept that we are teaching in the mentorship group. So today I'm going to look at dollar, and I'll see if I'll be able to look at the yen and the euro also. But the main focus of this weekly forecast is the dollar. So for those that were in the class, I think when was it? On Friday, the ones that managed to come to the class, this lesson is gonna be a bit of an expansion or an add-on for you to understand well how the interest rate market affects the dollar movement, how you can define your bias using the interest rate market. So that is to say the 30-year bond, the 10-year bond, the 5-year bond, and how the yields affect the movement of dollar. So this is basically how you define your bias on dollar index from those four crucial interest rate markets that I've mentioned. But for now, we're going to start with the dollar index, and this is like a follow through to the outlook, the forecast which I did on I think it's December 16th. It's here on the YouTube channel. You can go to the video list and revisit that. So this is a follow up through whereby December 16 I was strong bearish. I anticipated further bearish movement in the dollar, and that's what we saw for the remainder of the year. And then January now, there is a bit of a tug of war going on between the bulls and the bears. So with that said, today's forecast is mainly gonna focus on a few reasons that we might need to consider a US dollar rally. I'm not saying dollar is about to rally. I'm saying we just need to consider the following reasons, because as we have seen, the US dollar held a steady bid from Wednesday to Friday after the Democrats won the Senate, and it was the top performing currency after the result became clear that the Democrats have won the Senate. So this could probably mark the bottom of the 9-month bear market that we saw in dollar, right? All this bearish that we saw in dollar could be marked by the result of the Senate. So we could have already seen a bottom in dollar index right here. This could be the bottom, but we are not sure about that. So we just need to consider the fact that it could be the bottom and market is about to turn bullish. As they always say in forex trading, it's always good to follow the trend, right? Which in this case is a downtrend. But there is now a very good decent case for a dollar strength. You see, there's a very good case now that we might need to consider dollar strength, though we have to be cautious about it. So first things first, number one reason that we need to consider a US dollar rally is higher US stimulus will boost the American economy's growth, right? Higher US stimulus is going to boost the American economy. So that's reason number one that we need to consider. What do I mean by this? The implications for the Democratic win in the Senate, they are quite easy to understand. On Thursday, Joe Biden will be presenting his proposal for trillions in stimulus, right? Remember, trillions in stimulus, and this is going to help a quicker growth of the US economy. If anything close to that gets through Congress, which the Dems are now in control of, if anything close to that gets through Congress, on top of the 900 billion already handed out, it will make for 2 years of sizzling growth in the US economy. So there's better chances of the economy to be boosted by the stimulus package. Number two, we need to also factor in the corona vaccination. The US will be among the first countries to vaccinate. They've already started. I think they were one of the first countries to vaccinate the population. The reason being that it's one of the countries that has got the ability to manufacture vaccines, right? So with that being said, they are going to have a quicker recovery from the pandemic, right? They're going to have a quicker recovery from the pandemic, thereby more people are going to go back to work quite quickly and boosting the economy. Number three, remember, these are just reasons that I'm giving you out there for you to consider. You have to do more research on this by yourself. Number three, we need to consider the Treasury yields, right? Which we have seen trading higher. The guys who came to the class, you know already, we talked about the yield moving above the 1% price point. So higher Treasury yields, they are going to aid to a more strong dollar. This week's US dollar move coincided with a 20 basis point move in the 10-year yields higher, right? Which broke above 1.115%. That boosts yields differentials in US dollars favor on many fronts, right? I think some of the move this week was on bond hedges, and I'm quite curious to see how the dollar performs when yields stabilize. But the rate markets is spot to watch very closely. The rate markets, that's the one I was talking about. The bond market, the 30-year bond, the 10-year bond, the 5-year bond, that's the rate market. It's traded on the futures market, guys. You should know these things, including the 10-year Treasury yields. We need to be watching those 4 rate markets quite closely. Then number 4, the fourth reason for us to be expecting a bull run on DXY is the Federal Reserve. The Federal Reserve's expectations are too dovish at this moment in time, right? You as a student, you as a trader, the moment you hear a term like dovish, if you don't understand it, it's up to you to dig down and try to understand what does dovish mean, right? What does Ivan mean when he says the Federal Reserve's expectations are too dovish, right? The dollar will go wherever the Fed does, and the Fed will follow inflation. You must know that. Already the talk from the Federal Reserve is changing. Less than a month ago, they were contemplating more quantitative easing, right? They were leaning more to quantitative easing, right? They've been strident in forecasting a no rate hike until 2024, but that always comes with a caveat about inflation. They've been talking tough about allowing inflation to run and looking through temporary climbs, but when they are seeing 3% over year inflation, will they hit the panic button? Are they gonna look at the interest rate? Their track record for consistency isn't inspiring. Remember the Federal Reserve. Yes, they can say they're not going to look at the interest rate until 2024. But if we are seeing 3% year over year inflation, they might need to look at the interest rate, right? They might need to take action. So that's reason number 4. They are too dovish on the dollar right now. The 5th reason for you to be leaning more to leaning more to a bullish dollar. We are now back onto the chart, the technical chart. Sorry guys, this is more of a watch and listen forecast. Yes, we are going to go into the chart in a moment, but I have to outline these reasons for us to contemplate a bullish dollar. That's why I'm emphasizing in the group that I'll only start looking in the market after the 20th. So probably I'll start trading in February when I have a clear picture of what the rate market is doing. That's the bond market and the 10-year yield. What the policy for Biden will be when he's in office after the 20th. So it's best if you are a trader who's more cautious like me. You don't want to risk the market without understanding the facts at hand. So number 5, 5th reason to be more bullish on dollar is the technicals. As you can see here on the chart, right, dollar is challenging the 2018 low after a one-way 14% move since March high, right? So we got January, December, November. March high I think is coming up right here. So we got our March high right here. So this was a one-way 14% move to the downside, and now we have challenged the 2018 low. That's a big move to the downside, guys. So we need to factor in that technical aspect of the chart, that we are testing now a level which we haven't tested before, right? That is quite a big move. I don't think this is a base to build a multi-year dollar bull market. Take note, I don't think it's a base to build a multi-year dollar bull market. I still feel we have got more downside, but at the very least there's a case for a bounce. If dollar index is your foundation, the chart isn't significantly different, with the latest bounce coming within 1% of the 2018 low, right? So we need to be cautious and critical when it comes to our technicals. So the technical chart itself is now showing us we could be seeing a bounce to the upside. So that's a 5th reason for you to be bullish when it comes to the dollar. And the final reason, the sixth reason for you to lean more towards a bullish dollar is the positioning of dollar on the CFTC report. The consensus has a habit of being wrong. Remember, sentiment has got a habit of being wrong. The commitment of traders report shows a US 30 billion bet in the futures market against the dollar, with euro and yen longs particularly crowded, right? There's more people leaning to the upside on the euro and the yen, but it's something that you have to give a lot of thinking. If you are a trader, you need to think about that. So there's more positioning to the upside on the commitment of traders report when it comes to dollar. So yeah, this is what I wanted to outline to you guys, so that you have something to think about. You have something when you look at the dollar index chart. Remember, that's our foundation for all the trades that we take. We have to understand what the dollar is doing. So when you look at the dollar index, make sure you understand what it is saying. Now, coming back to the chart now we are going to look at the chart and try to highlight the positions, the levels of price that we need to look at. As you can see, this is the same chart which I analyzed December 16th. If I'm not mistaken, I uploaded a video December 16th. The same levels are still marked. Price is still in that monthly bullish order block. We have traded below the 50% mean threshold on monthly, and then we found support. So when we go to lower time frames, now December 16th, I mentioned this candle as a new level of supply, and I mentioned that when price trades back to that level, you need to look to be a seller, and that's exactly what happened here. See, price came back and it didn't hold, it traded lower, right? That was a sure trade. If you're in the mentorship, we were long EURUSD, long gold, because we were bearish, we were strong bearish on dollar. That candle on its own, the one I mentioned December 16th, that when price retraces back, you need to be long on fiber, you need to be long on pound, you need to be short on USD JPY. On its own, that price action yielded quite a lot of pips. So I'm gonna come here on a blank chart so that you can see exactly what I'm trying to mention. This is the candle that I'm talking about, right? I'm just gonna highlight the body of it, right? This is a hindsight illustration. I want you to see what I meant when I said when price comes back to that level. So we see that this is our mean threshold. And what, guys, my price points, they are not gonna be that exact. It's a hindsight study of what has already happened, which I anticipated and which I managed to capitalize on. So I told you guys that when price retests this new level of supply, which happened here, you need to be a seller, and that's exactly what happened. So that's on a weekly. We go to a daily, right? So this is now on a daily time frame. There is your shorting opportunity. Now if I go to EURUSD, right? If I go to EURUSD, you can see the same price action. This is the bullish order block on EURUSD, the one that corresponds with the bearish order block that we are looking for shorts on dollar index. So you can clearly see how price traded into the order block, bullish order block, and found support and then rallied to the upside. That rally on its own on EURUSD came to about 216 pips. Now if I go to GBPUSD, right, on weekly, you see, now with GBPUSD you'd have been critical because of Brexit, but still at a higher time frame you would have seen a rally to the upside. British USD, there, that's our bullish order block that corresponds with the same one that we highlighted on EURUSD. There's your 50% mean threshold. You go to a daily, you see, there's the rally that corresponds with the rally on EURUSD. Remember, if you're short on dollar, you are long EURUSD, you're long on pound, you are short on USD/JPY. GBPUSD, 345 pips were on offer. Yes, you wouldn't have got all of them, but that's the criteria that you have to trade with. You see, those are sure trades. Gold was also rallying, and that's where we capitalized more on gold. So looking at coming back to dollar index now, we still have to be critical when price comes back to that new level of supply that I highlighted in December. I still expect dollar to trade lower again, right? The reason why I'm saying that is, if we go to a monthly chart on dollar, if we go to a monthly chart, you see here, this low here, the low of 2018, April 2018, right? April 2018 low. Let me just highlight that quickly. So that's coming in at 88,935, right? 88,935. What do you think is here in terms of liquidity? What lies below April 18th low? There's sell stops there. There's liquidity for a momentum to build to the upside, which hasn't been cleared yet. That's why I'm still emphasizing that we could see the market trading lower again on dollar index, right? We've got sell stops here. And why April 2018 low? You see this price action here, April 2018, March 2018. You see that price action, a good and clear illustration of a bullish order block, right? We've got a clear, good illustration of a bullish engulfing. You see? Now, all those things that we teach in the mentorship, they must all come together. The consensus must be together. There must be positive indications when all the criteria line up. Like now, everything is lining up. We are in a weekly, price is in a weekly bullish order block, the one shaded blue, which corresponds with the bullish engulfing, which corresponds with the monthly bullish order block. We've got sell stops below. That means when we go to a lower time frame, say a daily time frame, each up close candle on the daily chart, each up close candle on the daily chart, you see those 4 candles that I've highlighted. What happened the following day? There was a sell-off, right? So this rally which we saw Thursday and Friday on the dollar index, it won't surprise me to see Monday or Tuesday testing this last up close candle, which becomes our bearish order block, and trade lower. That won't surprise me at all. You see? But now we just have to wait and see how price reacts when it comes to those price points. You see up here, it won't be a surprise that we'll find resistance and then price trade lower, just like how the market has found resistance here. You see there was a big rejection here of close to 20 pips, moved to the downside. Why was that there? Our last up close candle on H4, bearish order block, market retraced to the trades lower. If you come to EURUSD and you go to H4, you're gonna see the same thing applies, right? We found support. Where did we find support? Here. This is our last down close candle. These two together, last down close candle, the pound found support and bounced to the upside. Another, this is EURUSD, found support and bounced to the upside. Same thing applies if you come to GBPUSD. You see, price found support on our last down close candle. We bounced to the upside, 28 pips. Already that's 60 pips in total that you would have got on a Friday. You see? By basing your analysis here. Every up close candle on a daily, on a weekly, on dollar index right now is offering opportunities to trade lower. So yeah, this is what I wanted to talk to you guys about regarding dollar index. Yes, there is good reasons for us to be long on dollar index, but also factor in that from a higher time frame perspective, dollar is very weak. But the level that we are trading in at now, there's extra good reasons to be cautious and to start looking the other side. So I'm not saying this is a starting of another bull run on dollar index, because anytime dollar it can crash. There's too much uncertainty right now in the market. Before Trump departs, he might do something funny again, and then dollar might find itself in the red. So that's what I wanted to talk to you about. And regarding the rate market, right? If you come to barchart.com, now this is just going to be a quick summary. You need to understand how the bond market moves. So we've got the 10-year T-notes, we've got the 5-year T-notes, then we've got the 30-year Treasury bond note. These three, if you're in the mentorship, I'm gonna do another video now that I'll upload. That one is a private video. I can't put it on YouTube for reasons known to myself. I'm gonna do the video about it and I'm gonna send it to you guys. It will be a private YouTube video where you need to look at this video. This is in connection with the notes that I send in the group also. So yeah, I'm gonna do that video, and then you can understand how to include the rate market in your analysis, in highlighting how to define the bias of dollar index. So yeah, that's pretty much about it for today. I've already taken too much of your time now, 30 minutes. So with that said, guys, I wish you a very good trading week and all the best for 2021. Keep well and thank you.